all of the central banks who have been the biggest buyers of gold in the world to raise it to a higher level, to allow the offsetting of gold against your balance sheet liabilities. And I think it's something that they notice. And when Cynthia Loomis, senator from Wyoming, says it, to me, it's a whole lot more noticeable than when the head of the Dutch National Bank says it. But the fact that both of them are saying it, to me, tells me that the West understands it, notices it, but so does the East. And these are the countries that are buying it and producing it and possessing it in a way that, is we've never seen before. So yeah, I think there's a probability, don't know how high of probability, but better than ever before, that is on the table. And it would immediately not only render countries' balance sheets in good order, but it would reestablish credibility in a system that is massively lacking it. No one trusts it anymore. No one trusts politicians. That's why there are ridges on coins. First of all, Janet Yellen could just say, this is what it is. She doesn't need congressional approval. She can tell Jerome Powell, I want you to revalue gold to this number. The head of the Dutch National Bank has been talking about this for a long time. He said, we should revalue the gold that we have that's worth 20 or 30 billion euro right now. It's valued at $35 an ounce across the board on all the European countries. It's still the Bretton Woods number. In the US, it's valued at 42.22. They revalued it or made it official sometime after it was released from the peg in 71. But anyways, the bottom line is that you can't make it up. Every single central bank balance sheet holds gold in what's called the gold revaluation account. And as it is right now, the gold that is held in these accounts is not able to be to offset liabilities. And so the way that they hold it, it's the gold that they physically hold is in an asset on their balance sheet, but on the liability side is something called the gold revaluation account, which mirrors the amount of gold in the asset category. So it offsets one another, balances out. There isn't an ability, if you will, to offset it at this point against assets or liabilities rather. And so the head of the Dutch National Bank keeps saying, we need to do this, we need to do this. Well, it became even more relevant when Cynthia Loomis, the senator from Wyoming, speaking at the Bitcoin conference in Tennessee, after Trump got off the stage talking about establishing a strategic Bitcoin account to help pay down the debt, she got up and said, yes, and I'm going to submit a bill requesting that we revalue the gold that the Federal Reserve is holding on behalf of the Treasury to fund this. And so you're getting more and more and more people talking about it. You have Jim Rickards as an example, $27,000 an ounce. You value it, the gold held at Fort Knox supposedly, which hasn't been audited since '53 against M1. And there are others that will use M2 and do it. And whatever the number is, look, every $4,000 increase in gold would give a $1 trillion free and clear deposit into the Treasury general account. As crazy as this sounds, okay? And I'm not, I did an interview with Michelle McCory of Kitco, and I said this, and that's actually the title that they ran with, and is that you put it 130 or 140,000 an ounce, as nutty as that sounds, and just make a decree and say any government that wants to send their gold to the U.S. Treasury will pay them 130,000 an ounce. That value, based upon the 8,300 and whatever 30 metric tons we have, would our 36 trillion in debt almost completely balanced with our assets. Is it crazy? Over my shoulder is President Roosevelt. This is when everyone owned gold. In 33, it was currency. He confiscated it, and then by decree devalued the dollar by 40%, increasing the price of gold by 40%. It happens. It's happened. Could it happen? Yeah, why not? It's probably a lot easier than outright default or hyperinflation. Yes, it would create inflation, but it's probably something that would they notice as being less painful than the other options. But could it happen? Yeah, I think that is, look, why would the most powerful bank in the world, the BIS, reclassify gold as the world's only other tier one reserve asset next to U.S. treasuries and dollars after almost 80 years of it just being dollars and treasuries?
The revaluation of gold has long been a topic of discussion among policymakers, economists, and financial strategists. It's not just a theoretical exercise, it's an actionable strategy that central banks, particularly in the West, are considering as they navigate an increasingly complex and debt-ridden global economy. The script above presents a compelling argument for why revaluing gold is more relevant than ever. Let's delve deeper into the mechanics, implications, and potential pathways for this bold move. Gold has always been the bedrock of monetary systems. For centuries, it provided the stability and trust that fiat currencies inherently lack. In today's world, where fiat currencies are continuously devalued through inflation and reckless monetary policies, gold remains the ultimate hedge. But beyond being a hedge, it's now emerging as a potential solution for addressing sovereign debt crises and restoring trust in monetary systems. Janet Yellen, as mentioned, could unilaterally direct Jerome Powell to revalue gold. This isn't unprecedented. Historical examples, such as President Roosevelt's 1933 Gold Reserve Act, demonstrate that governments have used gold revaluation as a tool to manage economic crises. Roosevelt's move devalued the dollar and increased the official price of gold, effectively inflating away a portion of the debt burden. The question is, could this strategy work again? The answer lies in understanding the mechanics of gold revaluation. Today, gold held by central banks is recorded on balance sheets at outdated values, $42.22 an ounce in the US, for example. Revaluing gold to market prices or beyond could instantly inject liquidity into treasuries. A single $44,000 increase in gold's price per ounce would add $1 trillion to the US Treasury's general account. Imagine the fiscal breathing room that would provide. One of the most telling indicators of gold's future importance is the behavior of global central banks. Central banks are buying gold at levels unseen in modern history. According to the World Gold Council, central banks purchased over 1,136 tons of gold in 2022 alone, the highest annual total since 1950. Why this surge in gold accumulation? The answer is twofold: risk mitigation and preparation for a shift in the global monetary order. Nations like Russia, China, and India have long recognized the vulnerabilities of the dollar-dominated system. By accumulating gold, they're hedging against potential dollar devaluation and preparing for a world where gold might play a central role in trade and reserve systems. It's worth noting that this gold-buying spree isn't limited to the East. European central banks, too, are repatriating gold from foreign vaults and increasing their holdings. The Bundesbank's push to retrieve gold from New York and Paris vaults is a case in point. These moves signify a growing distrust in fiat systems and a renewed faith in gold's stability. Critics argue that revaluing gold to astronomical levels, $130,000 an ounce, for example, is unrealistic. But history suggests otherwise. Central banks and governments have a long history of making dramatic interventions during crises. The Bank for International Settlements, BIS, recently reclassified gold as a Tier 1 reserve asset, putting it on par with cash and U.S. treasuries. Why make such a move if gold weren't central to future monetary plans? Moreover, revaluation isn't just a theoretical exercise. It's a practical tool that could stabilize economies, reduce debt burdens, and restore confidence in monetary systems. As Andy Schectman points out, revaluing gold wouldn't eliminate inflationary pressures, but it might be seen as the lesser evil compared to hyperinflation or outright default. The West's lagging gold strategies stand in stark contrast to the aggressive gold accumulation seen in the East. China, for instance, is not transparent about its gold holdings. While official figures state 3,000 tons, many experts believe the actual number is far higher. China has been mining gold at uneconomical costs, importing massive quantities, and using sovereign wealth funds to acquire more gold off the radar. Similarly, Russia has quadrupled its gold reserves in the past 15 years. These nations are not just hedging against the dollar, they're preparing for a multipolar world where gold might serve as the backbone of a new trade and reserve system. The West, on the other hand, continues to undervalue gold's strategic importance. However, signs of change are emerging. When Cynthia Lummis, a U.S. senator, publicly supports revaluing gold to address national debt, it's a clear indication that gold is back on the radar in Washington. The global monetary system is at a crossroads. The current fiat-based system, dominated by the US dollar, is under unprecedented strain. Debt levels are unsustainable, trust in central banks is eroding, and geopolitical tensions are driving nations to seek alternatives. Gold, once dismissed as a barbarous relic, is proving its timeless value. Central banks are hoarding it, policymakers are discussing its revaluation, and nations are exploring ways to integrate it into modern financial systems. For individual investors, the message is clear. The time to accumulate gold and silver is now. These metals are not just hedges against inflation, they are tickets to financial sovereignty in an uncertain world. Whether you're a nation-state or an individual, the road to stability, credibility, and resilience begins with gold and silver.
If they didn't have something big in store for gold, why would the central banks be buying gold at a level the world has never seen before and repatriating it? Literally, no one's in 100 years of central banking, nothing like what they've been doing the last few years has ever happened before, where they're buying gold hand over fist. Of course, it is the only other tier one asset in the world, and they're all repatriating that gold at the same time. Why would the head of the IMF say, write a report in 2023 saying gold as an international reserve currency, comma, a barbarous relic no more, question mark? Why would Kristalina Georgieva, the head of the IMF, say a CBDC not pegged to something is just fiat? And of course, in principle, we already see that the unit settlement token is 40% gold. I've been saying for 4 years now, the only way to legitimize a new system is to marry blockchain technology with gold. And that's indeed, I think, where we are ultimately heading. But in order, if you look at the 40%, that's what the Swiss used when their currency was backed by gold, 40%. That gives 60% monetary latitude, money creation and whatnot, enact or use monetary tools. So yes, I think, as crazy as it sounds, that it would benefit all of the central banks who have been the biggest buyers of gold in the world to raise it to a higher level, to allow the offsetting of gold against your balance sheet liabilities. And I think it's something that they notice. And when Cynthia Loomis, the senator from Wyoming, says it, to me, it's a whole lot more noticeable than when the head of the Dutch National Bank says it. But the fact that both of them are saying it, to me, tells me that the West understands it, notices it, but so does the East. And these are the countries that are buying it and producing it and possessing it in a way that, is we've never seen before. So yeah, I think there's a probability, don't know how high of a probability, but better than ever before, that is on the table. And it would immediately not only render countries' balance sheets in good order, but it would reestablish credibility in a system that is massively lacking it. No one trusts it anymore. No one trusts politicians. That's why there are ridges on coins. As you go all the way back to the Roman time, and they had to pay their soldiers all around, this expanding empire. So it's getting more expensive. So they would just lightly trim around each of the coins and get a pile of shavings that they could melt down and fashion into more coins. And that's just politicians' way of choosing inflation over the tough decisions or over austerity. It was true back then, and it's true now. So the only way you will ever get, I think, credibility in a system is to peg it to gold. And if you don't want it to be redeemable, because, convertible currencies convert. President de Gaulle proved that. I think you just tie it to blockchain and make it very, very transparent and very open, and you have a system that has a fighting chance of credibility and sustainability. So yes, I do think ultimately that is on the radar, and probably a higher probability than people would give credit to.
As the world faces mounting economic challenges, the role of gold has never been more critical. In the first part, we explored the mechanisms and justifications for revaluing gold, alongside the East's aggressive accumulation strategies. Now let's dive deeper into how gold fits into the global economic landscape, its geopolitical implications, and why individual investors should take this moment seriously. Gold has always played a pivotal role in global power dynamics, and today is no different. The East, led by China and Russia, is systematically undermining the dollar's dominance. Their strategy isn't just about replacing the dollar, but creating a multipolar financial system that relies on commodities, primarily gold. Take the BRICS nations, for instance. These countries are no longer just economic competitors to the West. They are actively reshaping the global financial order. The BRICS bloc's recent developments, such as creating a new payment system, BRICS Clear, and commodity exchanges, signify their intent to operate independently of the dollar. Gold is the glue that binds these initiatives together. Without a shared fiat currency, gold becomes the default settlement mechanism, providing trust and stability in international transactions. For example, imagine China selling goods to Russia and receiving rubles in return. Instead of worrying about currency fluctuations, the two countries can settle their accounts with gold on a net basis every quarter. This removes the dollar from the equation entirely. In 2022 and 2023, central banks around the world added over 1,000 tons of gold to their reserves annually. Why? Because they understand something the average investor often misses. Fiat currencies are inherently unstable. The more dollars, euros, or yen that are printed, the less each unit is worth. Gold, on the other hand, cannot be devalued by central bank policies. When central banks hoard gold, they're not just making a financial decision, they're signaling their distrust in the current monetary system. The reclassification of gold by the BIS as a Tier 1 reserve asset was no accident. This move elevated gold to the same status as cash and U.S. treasuries, a clear acknowledgement of its critical role in the future financial system. For individual investors, this is a wake-up call. If central banks, with their vast resources and insights, are scrambling to acquire gold, shouldn't you? The idea of revaluing gold to address sovereign debt crises isn't new, but it's gaining traction. Imagine this. The U.S. Treasury, with its 8,300 tons of gold, decides to revalue the metal to $130,000 per ounce. This single move could balance the books, converting $36 trillion in national debt into manageable levels. Skeptics argue that such a move would create inflation, but let's consider the alternatives. Hyperinflation or outright default are far more catastrophic. Revaluing gold is the least painful option for governments desperate to regain fiscal control. Historical precedents, like Roosevelt's 1933 revaluation, show that such strategies can work. The benefits aren't limited to the U.S. Other nations with significant gold reserves could use revaluation to stabilize their economies, attract foreign investment, and reduce reliance on volatile fiat currencies. This is why policymakers from the Dutch National Bank to U.S. Senator Cynthia Lummis are openly discussing the potential of gold revaluation. One of the most exciting developments in the gold market is its potential integration with blockchain technology. Imagine a world where every ounce of gold is tokenized, creating a transparent, immutable record of ownership. This would address one of the biggest criticisms of gold, its lack of liquidity compared to fiat currencies. Blockchain-based gold-backed currencies could revolutionize global finance. They would combine the stability of gold with the efficiency of digital currencies, providing a real alternative to fiat money. This isn't science fiction. The International Monetary Fund, IMF, has already floated the idea of a blockchain-based international currency backed by gold. Such a system would also make gold more accessible to individual investors. Instead of buying physical bars or coins, you could own fractional gold through digital tokens. This democratization of gold ownership could significantly increase demand, pushing prices even higher. While gold often takes center stage, silver is the unsung hero of the precious metals market. Often referred to as gold on steroids, silver offers even greater upside potential during bull markets. Its dual role as both a monetary metal and an industrial commodity makes it uniquely positioned to benefit from global economic shifts. The gold-to-silver ratio, currently around 80-1, is a glaring anomaly. Historically, this ratio has averaged closer to 15-1. As gold prices rise, silver tends to outperform, narrowing this gap. For investors, this makes silver an attractive, high-risk, high-reward play. Industrial demand for silver is also skyrocketing, thanks to its critical role in green technologies like solar panels and electric vehicles. Combine this with increasing monetary demand, and you have a recipe for explosive price growth. Investing in gold and silver isn't just about protecting your wealth, it's about preparing for the future. Here's how you can get started. Buy physical metals. Coins and bars offer the ultimate form of financial security. They're tangible, untraceable, and free from counterparty risk. Consider ETFs and mining stocks. While not as secure as physical metals, these investments offer liquidity and leverage. Just be aware of the risks. Look into digital gold solutions. Platforms that tokenize gold ownership are emerging as a modern alternative. These allow you to own fractional amounts of gold and trade them like stocks. Diversify with silver. Silver offers higher potential returns but comes with more volatility. A balanced portfolio should include both metals. Stay informed. Follow trusted sources. Read reports from organizations like the World Gold Council and listen to thought leaders in the industry. The signs are all around us. Central banks are hoarding gold. Geopolitical tensions are driving nations to seek alternatives to the dollar. Blockchain technology is creating new opportunities for gold's integration into modern financial systems. And the debt crisis is forcing policymakers to consider bold, unconventional solutions. For individual investors, this is a rare opportunity. Gold and silver aren't just hedges against inflation. They are tickets to financial sovereignty. By acting now, you can position yourself not just to survive, but to thrive in the coming economic reset. As Andy Schectman says, gold is not just money, it's wealth, it's stability in an unstable world. Whether you're a nation state or an individual, the path forward is clear. Invest in gold and silver and secure your financial future.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.